Welcome to the Bread Up podcast, where our mission is simple, to help you grow financially and mentally, but most importantly, we're here to entertain you guys. So welcome, hope you're having an amazing week. But I think you guys noticed something. We're the Bread Up podcast now, no more L&J Financial.
Yeah, we changed the name, we got a new name.
New name.
Gonna be a new year, new content, but from now on we're gonna be known as Bread Up Podcast.
That's what
we're here to do.
It was a decision that me and Julian both made a couple days ago. We figured, you know what, we want to diversify, and we thought that L&J Financial, it's kind of sounding like we run a hedge fund. We sound like we're two 35-year-olds. We sound a little too professional.
Yeah.
And I think Bread Up Podcast kind of says, you've probably heard the term before, you get your bread up. It means kind of just improving yourself, and we thought it's catchy. So if you guys like it, let us know in the comments, wherever you're listening or watching this on YouTube. Let us know. But we're going to stick with it. We like it a lot, and we hope you guys enjoy it. But anyways, enough about us. This is about the market, and this is about the gains. Okay? Let's talk about kind of what's going on.
We called it a little red week last week.
Mm-hmm.
If you guys are in on the market this week, it was a red week. We had some pullbacks, some great buying opportunities, but it was expected. We were pushing all-time highs.
Yeah.
And last week we had that pullback that we were looking for, and it gave us some chances to get in on some companies that we were watching, and that's what we're going to get into today. Some of our favorite stocks that we've been looking at, and what we've been thinking about some of the emerging companies like fintech, and we're gonna
be also
we're talking about Bitcoin right now though.
Yeah, Bitcoin was a huge week. I mean, surpassed. Are we at 56K now? What are we at? Like, last time I checked, we were at 53. I think
we're right around $55,000 per Bitcoin.
It's insane.
It's crazy.
The rally's insane. I think what helped it really was, Tesla obviously buying a huge market cap of it. Like, it was like 10% of Bitcoin was bought.
Yeah, Elon Musk bought billions of dollars worth of Bitcoin,
Crazy.
Right around 48,000, I think. So it is kind of funny. I think right at Bitcoin being 56,000 per Bitcoin, that means Tesla and Elon, they're making, if they were to sell whatever they bought, that's billions of dollars worth of return coming their way.
Yeah, just literally in less than a week.
Yeah.
Because they were able to do so. But I think that's what we're seeing. Tesla's known for doing that. Elon sends out a tweet and he says, Tesla, cars are going great. His share goes up. He says, oh, bad day at Tesla. Shares go down. So he has a way of manipulating that. But I think that Bitcoin, obviously, my biggest fear for Bitcoin, honestly, is I understand that there's going to be a use for it in the future. Mm-hmm. But my worry is that at what point will it be overvalued currently to what it's going to actually be valued at? You know what I'm saying? It's what most companies right now are rallying, in the renewable energy and EV. At some point, that's why there's sell-offs of some companies, we saw it with, Nikola, whatever. That was kind of a pump and dump. But thing is, people go, this is way overvalued. It hasn't even made money. And I think when it does make money, this is still going to be too overvalued. That's what my worry is with Bitcoin. So, I think that right now, it's way overvalued for what it actually is providing, even for what it's going to be solving in the future. That's just my personal opinion on it. But I do think it's going to be a good alternative for spending money other than the dollar. But anyways,
I think that'll be a long time away, but I do think that we know today the market really doesn't reflect true value of what companies are. So
it always reflects the future. That's one. So that's one key.
With Tesla doing what they did, they're really the first big company to really publicly say how much Bitcoin they're buying, and that itself just made that it went up almost $20,000 once Tesla bought it, and you just got to be able to watch it and see if companies like Apple or Microsoft, Amazon, they might start coming out and they might start sharing that they're publicly buying some more Bitcoin, and that's just going to make that price keep going up to into the 100,000s potentially. So there really isn't a way to see if it's overvalued or not. That's why it's so risky in a way.
100%. But what I've realized is this huge rise in Bitcoin, because I think Bitcoin, other than a currency, it's more of a financial technology company or a fintech company, and that is a sector that we talked about last week. And we've been talking about. It's going to be a huge sector. And what I've noticed is when Bitcoin does exceptionally well, companies in fintech do exceptionally well. That's one thing that I've just noticed. It just continuously happens, and it's on the rise. In my portfolio, I'm holding about 11 positions right now, and 4 of which are financial technology companies. And the top pick for the week is for me is a fintech company. Stay tuned to the very end. That was not English. To listen to it. And it's a fintech company that I think is gonna have a huge rally this week.
Yeah.
But I notice, just keep in mind when you see Bitcoin rising. I mean, the Bitcoin miners like Riot, Mara are going to be going up as well, but also financial technology companies, because they provide for more seamless transactions online. I mean, one of the first two, like think of Visa and MasterCard. Their valuations are in the hundreds right now per share. I mean, there's financial technology companies being traded for $15 a share that will have the market capitalization of MasterCard and Visa. I think that one of the companies I'm going to recommend could potentially get there in a couple years.
Yeah, and you really got to watch these. There's always room for more regulation in the market, and especially with the cryptocurrencies coming out, left and right. There's thousands of new cryptocurrencies, and not just Bitcoin and Ethereum. There's all these other new coins that are coming out that people are trying to get some backing behind it. There just needs to be these companies that are out there that regulate the transactions being done, and that's where companies like Future Fintech and companies we're going to talk about, they're really necessary for the growth of this industry, because there really isn't that much happening of companies that are regulating the transactions of cryptocurrencies on a daily basis. So that's what we're looking at. The miners like Mara, Riot, those companies are getting Bitcoin, but
those are the biggest names of Bitcoin miners. I mean, there's going to be other ones coming. There's been other ones before, but these are the biggest market caps in terms, and they're also the most volatile, so they're fun to swing trade.
Yeah.
So if you're interested in looking for a pick to swing trade, and we'll get into some of this because the big topic of this video is fintech, but also what me and Julian look for when we're screening companies and looking for new companies to buy and invest in and swing play or hold for long term. What we look for, and one of the huge indicators is volume and volatility. Mm-hmm. But yeah, we're gonna go right into it.
Well, yeah. So
Julian, when you're looking for a new stock, what's your strategy? Because we kind of have different methods. I'm interested in what you do.
So I'd use a bunch of different methods. There's screeners available on the platform I use, which is Webull. It's a great platform to start out on, but there's ways to screen for stocks that meet your criteria, whether that is an RSI, whether it's a MACD, whether it's volume, whether it's whatever. There's a bunch of different indicators that you can check. You can sort it by market cap on what volume you want. You want to be looking for stocks with over a million shares in volume. Those are what I look at personally. But there's one app that I wanted to just talk about real quick. It's called Twits, and I want to hesitate to recommend people using it, but it actually is one of my favorite things to find stocks with.
Wait, really? You use Twits?
Yeah, so
I haven't never got it. Like what is it?
It's basically like Reddit, or it's a social media where you put in a ticker that you're interested in, and it just brings you to a giant discussion board of that ticker where people are just talking about that ticker itself. And it's really, in reality, a lot of bad and a lot of misinformation is spread on that platform, and that's why you have to kind of have a little bit more knowledge going into it. But what that allows you to do is when you have one company, let's say, whether we find a company like FTFT, Future Fintech Company, super undervalued, super new, and that's coming out on the market, you can look at that ticker, and then people will start posting other tickers in that board kind of relative to that ticker. They're like, oh, come look at this company. It's going to be doing well. It's the next runner, stuff like that. And that's where I kind of get more ideas when I'm in a sector. I'll look at Future Fintech, and then they'll link this new fintech company to check out. And they're not always instant winners, but it's always something to put in your portfolio to watch and keep an eye on where they're going. And then when it meets your criteria of an entry point, then you want to get in. But it's called Twits, and it's a great way. Once you have some stocks that you are interested in, you look at the board, and there's hundreds of new stocks that people will suggest and point you toward a new direction of looking to get in.
That's badass. I didn't even know that. I'm gonna have to get that. And we're not sponsored in any way by Twits. Like that's awesome. That's what I haven't checked them out yet. So
that'd be my advice.
That's your method. Yeah. No, for me it's actually really boring how I do it, but I trade mostly low cap to mid cap stocks. What does that mean? It means companies that have a very low volume being traded. Also, their volume is low. It's from anywhere from, I like to say, 350,000 and up, really, maybe like 6 million, 7 million. So they're being traded, because the worst thing that you want is a stock that is undervalued, but it has such a low volume. Sometimes you can't even sell the shares when you want to sell it. Like most stocks, you can sell the moment you click sell, and the moment you buy, you'll get the shares. But with low volume stocks, it could be a little bit more volatile. Also, they have a bigger risk of being potentially delisted, because you don't really know what the deal is with those companies. So higher volume means being traded more frequently, meaning there's some sort of a belief they're keeping it above, or Wall Street Bets has gotten to them, or whatever. But what are mid and low cap stocks? They are low. I like to think of anywhere from a market cap of 250 million to about 5 billion is the stock range that I trade between. Sometimes it goes a little bit higher depending on what the stock price is, but I like to gauge my trading on that methodology. So I go, okay, is the volume between 300 and 7 million? Is the market cap between 250 million to 5 billion? If it fits that, great. And I like to look at, this is kind of different than Julian, I look at the earnings per share. If it's positive earnings per share, meaning it's cash generative, it's earning actual money per how much, what it is in the stock price, it's positive. Also, is the PB ratio a decent number? Because if it's the price per PB is a price per book ratio, it just kind of indicates kind of the overall value of what you're buying it for. Like a PB of like 55 is incredibly overvalued. Like you're buying something that is, the stock price is super expensive compared to how much the company actually generates. So I encourage anyone to look for PBs between 0 and 4. That's what I look for. So my dream stock, if I'm looking for a company, it's between 250 to a million to 5 billion market cap, and it's got good earnings per share, and the PB is between 0 and 3. That means it's cash generative, it's being traded, and it's a legit company. So I'll have confidence in swing trading it. Also, I think a thing that me and you share is looking at companies that are oversold.
Yeah, oversold on the RSI would be like, when I say RSI 30, that would mean that it's oversold, meaning it's lower below the 30 indicator, which means it indicates that it's oversold, meaning it's a good deal. But that's what, an oversold RSI 30 stock would be any stock, like Apple, that sells off for no reason, and like on a red week when it pushes all-time highs and it needs to cool off, it normally comes down to that 30, and it normally will always bounce off that 30 and go up gradually to the 70 on the top, and that would be an overbought indicator. Yeah,
because that's a common indicator. Good way of speaking on that. Like that's a common indicator for traders that understand the volume, because RSI is completely in the short run. Like it's not like a stock where you zoom out in the graph and it's like this. RSI is consistently stays like this. It's all relative to the time frame and the volume being traded at the moment. So when it hits 30, which is like the lowest, that's a really low. It means it indicates that in the time frame the volume is negative. A lot of people are selling. That's a good indicator that you could potentially buy in if it hits that. If it gets below that 30 and it's a high volume, it's a good indication that you can buy it, because other traders will also go, oh, this is below 30 RSI. This is going to rally back up. And when enough people believe in that, it'll usually go up. And that's kind of what keeps people investing in swing trading. That's what I like to use a lot, especially if it's within 2 days. The RSI is a huge indicator.
It all comes down to the price strength, because RSI, it stands for Relative Strength Index. So the price throughout the day, whether it's whether you're looking at the 1 day interval or the 1 minute interval, there's price strength that happens within the stock that that's what you can take advantage of, and the price weakness is what brings it down. And there's momentum that brings it up, and then there's selling pressure that will bring it down. But most stocks follow the same standard patterns of they sell off, and then they rally, and then they sell off, and then they rally, and that's just how it works. Nothing ever goes straight up, and rarely does it go straight down. It's all about finding that, catching that wave on it going down and catching the wave right before it goes up. Yeah. When you see that confirmation, and that's the perfect time to buy in on that company.
Definitely. And I like that you spoke on that, because I think that the key is, you heard the saying, buy low and sell high. That's complete bogus. That doesn't, no one's ever, I don't know anyone who's ever just bought the absolute bottom of the trough and sold at the absolute peak. That's unheard of.
It's hard.
That's
you got
really
lucky.
Hard.
That's lucky.
So we like to look for indications of a stock that is starting to go up. Let's say I had a huge down day, and all of a sudden it starts going up a little bit, great. You can buy right there because it's a good indication that's going to be going up a little bit more.
Mm-hmm. Exactly.
And then it's going up. Let's say it goes up 10%. You can sell out. You made your gain there. You made a 10% day. That's incredible. So it's being wary of that, you know?
Yeah, and that's, you know, mainly that's what we're saying. There's screeners, you know, you put in what you want to screen for, whether it is an RSI, whether it is, I think you can screen a PB ratio.
Yeah, you can screen almost anything. I know. We trade on Webull, both of us, but I'm sure that E-Trade and TD Ameritrade, which are also two really popular brokerage accounts and brokerages,
they have screeners.
They have screeners as well. So, like I said, here's the key takeaway. If you're taking notes right now, if you're listening, key takeaway. This is my strategies at least. Low to mid cap stocks. That's what I screen for. What does that mean? Anything from a volume of 300,000 to about 7, 8, 10 million a day. Market cap of 300 million to about 5 billion. Because that's a good indication that the company is making money, starting to make money, and it's in developmental stages, meaning more or less the stock price reflects that, and it's not in the hundreds. Because I'm all for trading Facebook and Google and Amazon and Apple. It's great for you. I mean, Apple had a stock split, so I guess it's cheaper. But, you know what I'm saying? Like, yeah, you can invest in those companies long run if you have the capital for it. But most new traders, can't just buy a share of Amazon. Can't just buy 10 of Google. You know, that's how much, maybe one share of Google is what you have in your whole portfolio. For most beginning traders, their entire portfolio is probably one Amazon share. So those are not companies you'd go for. That's why I encourage you to look for low to mid cap stocks, because those have higher volatility. They are undervalued compared to what they're going to be depending on what sector and what service or product they're providing. But it allows you to make the gains that other bigger investors are without as much capital as well. So that's the big takeaway is the volume indicator, the market cap, and I like to look for positive earnings per share and a good PB ratio. Shows it's cash generative. I have confidence in putting money into that company.
And it's all about getting in early potentially, like we said, you don't want to necessarily, if you don't have a lot of capital, get going in on Apple, Amazon, Microsoft, unless you're doing options, which we will talk about in another video more specifically. Mm-hmm. But for today, if you don't have that much money and you're just starting out, you want to be looking for new companies that are emerging in markets that are already thriving in other countries, which is what we're about to talk about right now.
Yeah.
2 big companies that I'm going to suggest right now for you.
Yeah, and one last note before we move on to our top picks of the week, so make sure to stay tuned right now. We're about to say it. One thing is I understand penny stocks are a hype. Wolf of Wall Street kind of promote this penny stock trading thing, but I don't trade a stock that's under $5 to $6. I just don't look for them. I look for anywhere $5 and $50 if I'm trading for so I can buy a good amount of shares and I can make a good amount of profit on it, So that's what I look for. But you know what? Again, it's all up to you as a trader, what your risk tolerance is and whatnot. But anyways, yes, I made it to the part of the podcast and the video that you've been hoping for, so you can get the easy money play. I'm just kidding. These are just recommendations by us. However, these are positions that we hold. So we obviously have money in these positions, and like we always say, is we won't ever recommend you a stock that we don't have money in ourselves. That's unfair to you, and it's not fair to us. So Julian, take it away with your stocks, bro.
Yeah, so like we said, me and Lucas both, we think the number one way of investing is getting in early on new companies that are, cash generative and are, in an industry that's already producing and thriving in other countries, like we said. So one company specifically that we all know is Amazon here in the United States. Is probably one of the biggest companies that gets traded. We know Jeff Bezos. He's the richest man in the world, or in America at least right now. But what we're looking at is, we talked about Jumia a couple weeks back, which is going to be an e-commerce platform. It is an e-commerce platform in Africa. Similar to Amazon, we saw huge runs all the way from, I think it's went all 40% in the month of January.
It's huge.
Had some cooling off, like I said, but there's one more company, this company called Ozon. It's basically the same kind of thing. It's e-commerce platform. It's the Amazon.
And what's the ticker? Drop the tickers.
OZON.
And then Jumia is...
Jumia is JMIA.
Yeah.
And Ozon is an e-commerce platform in Russia, and we're looking at $66 a share.
So this is like the Jumia of Russia, basically?
The Amazon. The Amazon is the Jumia. Jumia is the Amazon of Africa.
And then
And we got
Ozon is
Ozon, and we're
Amazon.
looking at Amazon, basically e-commerce. Alibaba is the same kind of thing. It's huge, type of online orders. Ozon just released that they're doing food delivery now, like online food delivery in Russia, and that's just huge news because this e-commerce type of online groceries, online fast same-day delivery packages, on anything you want, you can get on Amazon within 2 days. Like, that's just how we do it in America, and it's insane. And Amazon is $3,000 a share right now, and it's one of the most profitable companies in the world.
Probably the most profitable company in the world.
And so that's why there's so much room to grow here in Russia and in Africa with Jumia and Ozon. They're both under $100 a share.
Mm-hmm.
Jumia this week has earnings on the 24th, so that's just something to maybe watch out for if you have some shares of Jumia. Just keep an eye out on that. Their earnings are coming up on the 24th. They normally, the last couple earnings reports, they had some sell-offs then, but you still never know. I don't normally hold through earnings, but Ozon and Jumia, they're both companies that you should check out. Definitely add to your watch list because e-commerce is such a growing industry, and it's huge. In America, it's almost a little overvalued. That's why I'm suggesting Ozon and Jumia.
They're international companies.
They're international. Russia and Africa, huge populations, but they're going to be right up there in a couple of years. So long term, they're both great.
Yeah,
plays.
those terrific picks. Mine's kind of a basic pick. It's a swing play. It's called Finvolution Group, FinV. They're a fintech company trading at about $7 right now. They were about $4 about a week ago, maybe a week and a half ago, and they rallied to about $7. They're about $6.80, 85 cents now, give or take 10 cents. Not quite sure. But I'm seeing this go all the way to going to $10 by the end of this week. I just saw how the rally worked last week, and I think this FinV group is going to be going all the way to $10. This is a Chinese company, so with Chinese companies, I understand there's like a stigma around Chinese companies, and there should be. I mean, the trade policies are iffy. They're pretty debatable. But, there's like random noise coming from my computer. But, anyways, the ticker is FNV, Fintech, Finvolution Group. I'm seeing them going to $10 by the end of this week, just based on the rallies. Now, the earnings aren't terrific, and this is not a long hold at all, in my opinion. This is completely a swing play, meaning you're buying and you're getting out in a very limited time span. That's how I'm trading this company, and that's how I suggest you should. But again, it's up to you to do your due diligence and as an investor. But that's my pick for the week, FinV. I think they're going to be rallying to $10. So I think that they're going to have another 10 to 12% week.
Yeah, and we're going to keep looking for these undervalued fintech companies because I believe personally that cryptocurrency is just going to be going up, and fintech, like we said,
without a doubt,
is going to be a huge sector that's going to be making crazy moves in the next couple of years. But yeah,
that does it for me, guys. We thank you guys so much for listening, and we're going to stay tuned on our Twitter and on our Instagram. We're going to be keeping you guys tuned all week with how our picks for the week have done, how other things that are on our watch list are doing, and stuff that we might even tell you to pick next week. Anyways, guys, we'll see you next Sunday. Thank you so much for listening. If you're watching, thank you for watching.
It's been Julian.
It's been Lucas. Take care.